Charles, you nailed the trouble, the difficulty that some of the stocks of these banks would get into. Where are we just in the phase of how you think this is going to play out?
Well, the first quarter earning metrics are not going to be very supportive. We're going to have flat revenue growth, rising credit costs, flat pre-tax income growth, and EPS growth probably in the mid to high single digits due strictly to the financial engineering of share buybacks. That's
the story. Let's talk about it relative to the price of the stock, Charles.
Yeah, I mean, these things are cheap on a relative basis. But, if you go back to what Romain talked about, the share buybacks and the dividend yield, that seems to be the defense that the bulls have for these stocks. And if you look at those, the top 5 highest grossing yields, by gross yields, I mean those that if you add a 3% dividend yield and a 6% buyback, that gives you a 9% gross yield. If you look at the banks with the highest gross yields, based on last year's CCAR exam, they've all underperformed the market. It's Citi, Regions, Discover, Fifth Third, Wells Fargo. So that has not been a supportive element in reality versus theory.
So, Charles, essentially what you're saying is that if you're bullish because of the capital return program, that's worthy of a lower premium. Is that essentially the argument?
Yeah, no one's going to pay a premium for earnings that are generated through financial engineering. You need revenue growth, and you're not going to see that in the first quarter. I will say these stocks are starting to trade as if they're looking through first quarter earnings to the second quarter, and you will see slightly better revenue metrics in the second quarter. But the most important thing is you're going to see slower net interest income growth as the year progresses. So NII will probably grow 5% in the first quarter, 3% in the second quarter, and be flat year over year by the fourth quarter. So if you're entering 2020 with flat NII growth, it really does not portend well for earnings in 2020.